Hello guys, glad to have you on board again today. Unfortunately, there is no future data feed open up today, so I was pretty much expecting this, so that's not a big of a surprise. So we'll have to delay the third scalping show probably to next week, unless somehow a miracle shows up until tomorrow and I manage to get this account funded and the futures data activated, which I think any fucking way it's going to be account funded first and then data requirements asked afterwards. So I think there's going to be an additional delay anyway after the account being funded to get the data running on. So probably next week. Obviously that depends, but not on me. So hopefully next week. Anyway, today Fed, so we're supposed to do some educational content. Hardly going to be able to handle this. I'm also not going to be able to make some intraday trades, simply Fed. So yes, there is a lot of expectations around this summit. Not necessarily a summit. Let's say this month of FOMC conference is going to be as important as next month. So, and between this one and the next one is going to be major game changes that can be pretty much significantly impacting the market. So I'm just going to try summing up how important this is in both a technical matter and a fundamental matter as well. You know how biased I can be regarding Trump, and some users have been raising that concern, and I'm very well aware of this. I definitely have a personal problem with Trump, even though I don't know this person personally. I mean, this guy is definitely what I hate the most in human beings. Narcissism, stupidity, and all of these combined together in a level I've rarely even seen in my past. And giving some power to guys like that is really pissing me off. So yes, there is obviously some emotional impact in my trading decisions, but still they remain trading decisions for one single reason. I'm not trading them because I think this is what's going to happen, not because I want Trump to be turned down. It's more likely because I've got technicals suggesting that as well. That doesn't nearly mean it's going to end up this way, and you really need to understand that. So yes, I might have a personal bias, but who gives a fuck? Everyone needs to have a bias. I told you this, when it leads to a trade, there is a series of actions that must be taking place. So the first one is build yourself a goddamn conviction. It is not about who's going to be right, who's going to be wrong, just what do you think is the most probable. Thinking. So this is subjective analysis. The first thing starts about what you goddamn think. And then you're going to have to look out for confirmation that what you think is what's the most probable to happen. Obviously, when you're beginning this kind of fifth trader sense, you won't have that. So it's pretty much going to be a 50-50 game. You're going to think it's going to go up or going to go down. You end up being right, wrong. Who gives a shit? All I care is that afterwards, after you made yourself a decision, because it's important. If you don't make yourself a projection of what you think is the most reliable thing to happen, then you will be a switcher, and that's the worst case scenario. You must not rely on technicals, because technicals themselves will be both bullish and bearish. They're not meant to give you the direction to follow. They're meant to tell you, all right, you want to buy, this is how you're meant to buy. This is how you're meant to sell if you want to sell. This is where the low risk areas for sellers are. This is where the low risk areas for buyers are. Then what's going to come next? No one knows. And I don't, and you don't, and no one will ever do. So it's basically you start from a 50-50 kind of a game, and this is close to gambling. Yes, in that perspective, that is just like gambling. You'll pick up a side, but the difference between you and the gambler is that the gambler will just trade wherever he thinks it's going to be reliable. So it's going to use just like, all right, I'm 61% Fibonacci, let's go. Or, all right, I mean, it's all those things. We're reaching out moving average, so let's go. Or whatever. The simpler the process is, the most dumb the risk management is. So the closer you remain to the gambler. Obviously, the better and the sharper the risk management you'll have on top of this, the closer you'll get to actual trading and risk management. But still, at the beginning, it really is important that you get yourself a bias. And personal bias, and like I said, it can be good, it can be bad. Who gives a damn? What makes the difference is when you risk manage versus you don't. That's all that actually matters in here. Anyway, so intraday, cannot nearly do anything out of here for many reasons. What the hell is that? We tried to overcome the bearish resistant the resistant context, and it failed. We got a brutal bearish engulfing 1 hour structures after a gapping up day. So that's not the kind of thing that happened in a gap day. So that's definitely what put an end to this market inflow. Basically started for the first couple hours of cashing session and then bam, terminated. The bulls are out, so the bulls are not in control. But does that mean the bears will take it over? We don't know. Obviously, if you have a bearish bias and a bearish vision of this market in this very important swing area, then obviously this could have been a selling entry, all right? Because we try to overcome the context. We basically failed on a very dense technical area that we've been highlighting already. So the price area makes sense. The price reversal area makes sense as well. We don't have a signal, but we've got an overbought cluster, and it just lacks of a price confirmation. But to be honest, it really went pretty close to signaling. So I would say, all right, no triangle, but close to get one. That doesn't mean you can't take the trade. I would say you can take it, but it also comes up with a little bit of a risk. Having the triangle truly plotted on the chart will be a better risk limitation. Not having it but being close to have it feels like, yes, it's more than enough to me. And I said that yesterday on Discord. If you had not at all, not a single bearish entry on your swing trades, you might eventually want to take one. It's a risky one, obviously, so it comes up with a speculative leverage, high level of risk, and you're anticipating the Fed, which means you're trading against the Fed, you're taking high level of risk, and you don't even know what the fuck is going to be said. You don't know how the market will take it. So if you're stopped out, it shouldn't be a big deal. You shouldn't be a big loss associated with it. All right? But we're definitely in a swing area. There are lots of expectation coming from the Fed, lots of tension as well, and that is going to be today's topic. The problem is, outside of just technicals all by themselves, first of all, let's sum up those technicals. So, weekly chart basis, this is what we've got. A brutal bearish reversion, and we're nearly going to terminate the second quarter of this year. So, multiple options. We still have 2 weeks to go. First option, we go straight bullish to historical highs, which means we'll make a quarterly candle close historically high, probably, and we'll make it outside of context, which will probably give us a couple quarters of neutrality, which means for the bears, there will be less work to do as a bear for the next couple quarters. That's exactly what I thought it would be, all right? If we end up being proven wrong one more fucking time, then we'll have to be more patient before selling again. Option number two, we fuck it up. The Fed just brought us back, bring us back into the resisting context, not to say even breaking it by the end of the month. And we'll have a negative quarterly close, which means we opened in there. And if we get to close at the same level or even lower, it's gonna be freakingly negative for next quarter. This is what the quarterly candle looks like, all right? So we had the pretty nice bearish one. We had this one, kind of an inside bar, like, all right, it wasn't necessarily the end of the world. Let's temper that feeling. But if we do end up with a doji candle on top of this structure, this is probably going to be, all right, we tried, we failed. Next one is going to be the right one. And I pretty much tend to say the next one is probably going to break down this support area in a row. So if we go bearish, it has short-term implication. We'll have 3 months to break down this support, and we're very likely going to be doing it, which means out of this bullish Maribuzu hesitation candle, if we break down this support, which is 27.35, if we end up breaking this one by the next quarter, we'll trigger probably an evening star pattern after a freakingly bearish engulfing, which means we'll just double down on bearishness in a quarterly freaking basis, which is really the big deal here. If we send the quarterly bearish signal And we have all the odds to do it. We're in a bearish oscillation for momentum, so there's everything we need to go bearish. Just needs the price to go along. Everything, the macroeconomic is deteriorating, the Fed is getting more dovish, everything suggests a recession is along the way, just equity prices doesn't even price that in. It feels like the stock market is going to price in further gains from profitabilities on companies, like profits are never ending in the beautiful stock markets, but if there is a recession, believe me, the profits will contract, and therefore the valuations will contract as well. So if something goes wrong with the pricing in the asset classes, and especially the shares, especially the stock market itself, then there is going to be a market crunch, which means we're going to have to go back to reality, the reality that everyone else is showing up. All right, the fund manager, they're basically almost exposed to the market right now, just like if there would be in recession. They're loading up on bonds, they're selling up stocks. So what the fuck is going on? Why the hell is the stock market going up as fund investors, classical investors are selling or getting into safer areas? All right, then who the fuck is buying? And we've been clear with that since the beginning. We know who the fuck is buying. That's the biggest concern. We know that stupid traders who are bulk buying the asset classes, and most likely into stock market especially, and moreover into riskier fucking assets like buying the tech stocks, all right? That's what we have. That is where the problem is. And yesterday again, more volume has been rising and has been poured into the ETF sector, where obviously these guys are anticipating a bright future and they're buying it entirely. They're not even stock picking. I mean, professionals know how to handle ranges. They're stock picking. So dumb traders in here are buying this, and I don't know, but when dumb buyers are controlling prices, there is a lot of concerns, because the Fed is supporting this dumb price movement, is doing anything they can. Trump obviously wants the markets to be as high as possible to be re-elected. So we've got a dangerous, very dangerous context in here, because dumb prices are leading the stock markets. The Fed is doing anything they can to prevent selling action. So by opposition, they're supporting bullish prices, and Trump is trying to support it as well. So I've got multiple options. Either the smart money is going to go on the opposite side. They're short selling. And in that perspective, it's not going to be pretty, because the stock market will go against both the Fed and the White House. And once again, I tend to believe that these are the guys who have the power. The power has never been to politicians, and the power has never been to the Fed. The power is in the smart money's hands. They're deciding what the fuck they want to do with the stock market. For now, I think they're playing by the rules, which means they don't sell, they don't short sell, but they've been definitely selling. Whoever has been the counterparty of this volume, all right? These guys are buying like shit. If the stock market is going lower, simply means someone is selling in front of them. So do you think the smart money is not selling? They are selling, but they're selling what they bought previously. They're not yet short selling the market, but they might be about to. If somehow they decide, all right, it's about time to go against the Fed, fuck them, let's make a little bit of money, and we're just going to take the dumb money to the wrong foot side. That's exactly what I think is going to happen. Kind of a breaking structure into this beautiful confidence game that we have, in which everybody plays according to the rules. The smart money doesn't short sell to avoid a market collapse. The Fed does anything it can to support the big bank's solvability, to avoid bankruptcies on riskier assets. And on top of this, we've got Trump. But the problem is Trump is bullshitting in this triad. Because if Trump was just playing like, all right, I want the stock market to go up, that's fine. But Trump is messing up with the Fed. And that's the big problem. Trump wants a duality fuckable system in which it can do whatever it wants with the market without the Fed going in between. Because the Fed is saying, all right, Trump is bullshitting, we know economy, and the economy is not performing well. So for now it's been supporting prices, but at some point something is going to change. The Fed, being really accommodative, just says something. They're not expecting things to improve. So there is this beautiful triad in which the market takes the best out of everyone to just rise, but let's be honest, at some point we'll just take the worst of everything. We'll just say, all right, Trump has been bullshitting, so fuck it. Everything he's been putting in motion so far is just bullshitting the worldwide trade system and fucking it up entirely, like getting the Chinese to be really angry at the Americans right now. They're probably going to lead us to lose the European market instead of making something good out of here, because let's be honest, I don't know what the hell is going to happen for sure, but I pretty damn expect that you guys in the US, you're not going to get the European market for 5G. Pretty much Huawei is going to get it, just like they got it out of Russia. So you bullshitted the world with your shit. You wanted to be first. You're probably going to end up alone, and that's dangerous, because all those first policies, they've always been ended up this way. We knew it wouldn't be producing anything good, but still Trump thought it would change the game. Yes, it might have changed the game for 6 months to 12 months. It's going to have to pay for the price. I definitely think it is. One more time, prices are rising, risk is increasing, which means at some point the risk will show up, not necessarily where you're expected to show up, but still, rising problems, rising tensions, it's not good. We should really put them down. And instead of putting them down, what the hell is doing Trump? He's messing up with the Fed. Just now it wants to put Powell out of order. What the fuck? You don't do this. It's unconstitutional. You don't have the goddamn power against the Fed. So you shut your fucking mouth and stop listening to Trump. This guy is just a big mouth without a single understanding of what the hell he's doing, and you're gonna have to pay for the price, all right? You've elected this guy as a president. Now you'll see what the consequences are. So far, you've been yielding the good, you'll yield the shit at some point, and believe me, that's how life is. When you see just the beauty of something, means that the bad things are down the corner. So, that's exactly what I think. I don't know yet when exactly this beautiful triad will just burst itself, because it's an unstable structure. But all I can see is that generally, I use psychology in here because this is basic psychological knowledge, all right? When you've got a triad like a threesome, you know it's not going to be stable structure. It doesn't go along this way. And from what I can see in here, it's like we've got a pretty old couple who's been knowing each other for years and years and years, like years of marriage, all right? The Fed and the market. They've been having a complex relationship one to each other for years, but still they've been living together for years. Generally, and most of the time, aside of any political pressures, because normally the political goal just, all right, watch over the Fed, but doesn't mess around with it. But now we've got Trump who said, all right, you know what? I'm here. I'm a beautiful young lady. I'm going to just put a little bit of emotions into your pretty old couple, like, all right, let's make a threesome. So that's fun, all right? You've got a third party getting into this beautiful long-term marriage who isn't obviously a simple marriage. There's been some complications and stuff like that. Life is complex, all right? So anyone who tries to make life simple is just an asshole, probably trying to sell you some shit. That's exactly what Trump is doing. For him, what he says, it's simple. We just knock down on others and we're going to be stronger. All right, that's simple. It's been working so far. Means the risks are hidden and they will show up sooner or later. So that's exactly what I think. Now take over this magic. Let's get back to this beautiful marriage for the threesome thing, all right? So this beautiful old couple just wants to add some spices to their sexual life, so they're bringing in the third party. Now, ask a psychologist, a psychiatrist, how does this end up most of the time? Generally, the latest upcomer gets the one who be rejected, all right? Generally, the couple gets back together because they've known each other for a longer time than the third party. So whoever leaves first is generally the third party, and the couple gets back together. It's been an experience. It was fun, but still, let's put this guy or this girl aside. It wasn't nearly necessary, and that's exactly what's happening. Trump is trying to get in here. He pretty much understands that someone will have to get the fuck out of this relation, but reality is that, statistically speaking, he's the one who's going to be put aside. He doesn't yet know it. So he thinks he's going to put the Fed away. But do you think the market will follow on Trump or the Fed? Chairman Powell is going to be there for 2 decades, approximately, at least 1 decade. Trump isn't nearly sure about being there a few months from now. So who the fuck do you think the smart money will follow up on? The smart money doesn't think short term. The smart money at some point may think short term, but they have broader vision as well. These guys are risk managers. They might think, all right, there might be still a little bit of profit to do, but they don't want to fuck up the entire economy. They're making long-term profits out of here. So if you think the smart money is ready for a big, beautiful bubble, because it's going to be nice to have some glitters in the stock market, no, they don't think it that way. They pretty much want the market to sustain longer, and having some speculative bubbles on top of credit bubbles. They know how dangerous this is, and I'm not certain that a risk manager will say, you know what, let's take the risk, we'll see how it goes. I don't think it that way, because that's not how the smart money thinks. They'll say, all right, we're rising some red flags, some pretty concerning flags. Asset managers are nearly heading toward recession type of exposition toward the market, so it might be about time to follow the market instead of following Trump, all right? So they'll say what? They'll say, all right, maybe the Fed was right, maybe we're heading toward recession, maybe they're right to be accommodative, so let's do it. The Fed will lower interest rates, we'll go toward recession, fuck Trump. That's exactly what I think is about to happen. I don't know for sure it's going to happen today. All I can tell is that the recent Trump's attacks versus Fed, not the first one, probably not the last one, but we're rising tensions. And rising tensions in a triad is just about the signal that the thing is about to change. The thing is about to explode, and someone is about to be ejected. And I don't nearly think the Fed is going to be out of control. So Trump may try to do whatever he thinks, but if he tries to put the Fed under control, he's doing something that is highly unconstitutional, and he doesn't even have the power to do so. So anything he tries to do against the Fed is either going to piss off the Fed or piss off the market makers. Both ways, being aggressive versus this, in this context, is the least intelligent decision that Trump could make. But still, once again, people think Trump is a successful person who's been making billions with nasty, but still pretty comfortable, sustainable incomes. He's made himself rich out of nothing. Oh my goodness, we've already been talking about this, so I never thought I should be doing this again, but I'll do it, all right? Trump is an asshole and a liar. Now let's get to the actual Trump's life, what he's actually been doing. I'm talking about fact in here, not beautiful, not stupid shit invented out of nowhere or subjective analysis. Let's talk about facts and numbers. I gave you last time, I should get myself to figure out this link again. But anyway, you'll probably easily find it. If you just Google up Trump's real life, you'll figure out what the fuck's been happening with his casinos and stuff like that. The fact that the guy basically ruined the investors whom he's been working with. He ended up rich simply because he paid himself a shitty freaking ton of money for the bad services he's been providing. So the guy's basically paid himself $4 billion a year for doing what? Ruining investors. So great. How did he end up going out of this without troubles? Because he's been rising debt. That's exactly how the Trump system works. When shit hits the fan, he gets to load up on debt, high risky debt, and he gets to pay whoever is stupid enough to buy this debt to pay for his shit. So, who is going to take the shit right in the face when it's going to hit the fan? Whoever has been stupid enough to buy bonds. Because that's what it's doing. It's selling American bonds at a crazy fucking high prices for something that is credit negative. Because the tax plan might be angry at ECB Draghi with QE potential system and stuff like that. I mean, the last QE we've done was $80 fucking billion a month. Right, let's take it over 2 years. What does that make? That makes 300, sorry. I just wanted to make sure not to bullshit, so I'm sorry, but I took the calculator. So yeah, it makes approximately $2,000 billion, right? Or euros, but still pretty close one to each other. So $2,000 billion. Do you know how much it costs a year for the tax plan? 10 fucking thousand. So on just 1 year, you guys are being 5 times more efficient than QE in money spending that you don't have. So do you think QE is a big danger for the euro area? No, the big danger is the tax plan. It was out of any sustainable timing to trigger this shit. This is the kind of stuff you trigger after recession, generally not when the market is stopping up. What it's been doing is been overheating the economy, creating some shitty speculative bubbles here and there, and especially in the riskier assets, the take bubbles and stuff like that. So if you think we don't have a bubble, oh my goodness, open your fucking eyes. You're paying 40 to 100 250 times the profits on some tech assets as we're heading toward recession, which means profitability is expected to dampen. So what the fuck is wrong? There is a speculative bubble. It's as big as it could be. Can it be bigger than that? Yes, there's no limits to people being stupid. But if you think Trump is going to get over control on prices, then oh my God, that's going to be the biggest ever bubble we've ever seen. But what's going to come after is also going to be the biggest ever market crash we've ever came across. And I pretty damn hope we're not going to go down this road, because what's going to come out of this is probably a decade or 2 decades of recession coming along the way, not just a short-term recession like I expect it to be. So if I'm totally wrong with my scenario, if Trump's managed somehow to take over control over pricing, asset pricing, and if it goes to some crazy, stupid, dreaming, catching bubble in which Trump makes the Dow Jones, and they say, all right, the Dow Jones should be 10,000 points higher, and the people are just basically buying the shit, just like you would buy a car from a commercial. That's just exactly it. If it goes along this way, there is no market anymore. I mean, the market will just be as stupid as a toy to play with. And let's be honest, what I'm teaching you guys is not how to trade this. I'm teaching you how risk management works. So if we go along bubble trading, with Trump being holding for the stock market, oh my good Lord. You can be damn sure I'm not going to be trading the stock market for a long time. I'm going to let the guy into its bubble with its rainbows and unicorns. But you can be damn sure that whenever the bubble reaches out the termination stage, in which you know how to trade, you don't know how to trade bubble, but I do know, and I'll teach you, and we'll have plenty of time to do it in the meantime. I mean, probably a couple years at best to sustain in a bubble, but the parabolic scheme structure will be probably the most rewarding ever trade of my life if Trump managed to go along this dangerous path. So it is not, I don't nearly even think it's about Trump. That's the thing about Trump. The guy is attracting attention because he's a narcissist and he likes that. But the thing is that every narcissist end up in a bad direction at some point, and moreover when they have access to some power and visibility. So Trump is just where he should never have been. He's got a lot of attention, a lot of power, and is a narcissist, like a crazy narcissist, probably the most narcissist person I've ever seen. So this guy is definitely the profile of whoever should never have access to such power and such visibility, because he's going to do shit. And the problem is that it will have consequences for whatever power he has. So if you gave this guy the power to run a company, it's going to fuck up the company. That's exactly what he's done with his casinos. It works just fine at the beginning, and then it goes too hungry. It do stupid shit. It takes too much risk, and then the shit hits the fan. It ruins whoever has been in there, and obviously it try hanging up out of there alone. Because what it does is that it say, all right, I see the problems coming, so I'm just going to put myself out of trouble. I'm going to make others pay for my shit, and in the meantime, I'll still take the nice paycheck. That's exactly how the Trump system works. And if you think he's going to be doing any different with the US, because now he's not playing with his goddamn company, he's playing with the US itself, the US economy. And let's be honest, it's been doing the exact same old recipe, putting you guys in debt, in the craziest amount of debt. It's been taking you a shit tons of risk, and who is going to pay for this? Whoever's invested into US. That's exactly this. Who's going to pay for this? Whoever is invested in there. How are you going to lose your money? I don't know. So many options. Either it's going to be fucking up the credit, which means whoever holds T-bonds is going to be ruined. Option number 2, the dollar fucks like shit, which means, yeah, you can be rich in dollar, but you're going to be so poor versus the rest of the world. You're going to be trading alone, and which means your trade balance, which is negative, will cost you quite a fucking lot, because you will be having to buy shit from other countries with a very weak currency. So, yes, that's one of the many ways that the shit can hit the fan for the US. I don't know which one is going to be the actual one. All I know is that I know how to handle risk. And when I see risk, there's always a tipping point. The only thing that can come out of risk management right now is if we go totally irrational risk management. Going into bubble, I said it's possible. If it happens, then I'll just let it go. I'm not fighting against bubble. Bubbles requires a lot of patience, a lot of smart decisions, And if it happens, instead of trading the stock market, I'm going to move to countryside, pretty much going to put my son safer from the shit that may come afterwards, because like if we're heading to 20 years of recession afterwards, or 10 years of recession, like an extended recession, like the one that followed 1929, that's exactly the kind of context we're in right now. We're playing a very, very dangerous game, and what's going to come right after is that kind of stuff. That we're going to fuck up the economy, and it's going to take years to like solve the issues, patch the problems, and create new versions of the economic system that we guys are living into. Remember that economic is not just a system or something like that. The economy is just it's just the structures that gives a framework to humans' exchanges. Right? The economy is how we do create stuff and exchange stuff between each other. That's exactly what the economy is. So if we fuck up the stock market, we're going to fuck up the economy as well, which means we'll have to rebuild something from scratch. And it generally takes multiple years, not just a short-term recession like I was forecasting. If I'm wrong, we're going to have to switch the scenario. If we go bubble, then what's going to come after is going to be way more dangerous than what you think it is. So I don't know the future, multiple scenarios. I'm not saying, once again, that this will happen. All I'm telling you and what I'm sharing with you is my personal beliefs. Once again, I do trade them for a single reason. I still have signals suggesting we have some bearishness. So I think bearishness, I see bearishness in the technicals. I do trade bearishness. If I end up being proven wrong, which is possible, I'll know that I was wrong. Oh my God. How dangerous that is. When you're forecasting a trend reversal and you end up having a bubble, this is where you're generally going to take a loss. It's an inevitable loss. And I'll take it. Yes, it's probably going to burn 20% capital on top. The 10% I already took from the stock market stop losses I had earlier this year, I might probably take another stop loss on the dollar, but still, all right, I'm fine. Take 20% off my table. Don't worry, I'll take 3 times that later on. So it's just, I need to have a plan. I don't know what the hell that plan is. All I can tell is that rising tension against the Fed just simply means Trump is under pressure, and as he is under pressure, it's not a good sign. Trump being aggressive, he only is going to be doing this if he needs something. What the hell do you think this guy needs? He needs to be reelected because all he thinks about is that what concerns him. He doesn't nearly give a shit about what happens to the American economy. All he cares about is being reelected to hold on to the power. That's exactly what narcissists believe. It's bigger than that. It's bigger than the guy. He cannot even think straight because he's in a context in which he just simply cannot. His personal profile just putting him in a dangerous corner in which he cannot even forecast the shit hitting the fan because it just doesn't think smart, and he thinks biased. And the most dangerous stuff is that the Trump way of governing is just like a dictatorship. The guy tried to fire whoever is not agreed with him, and it's a great, great danger. That's exactly what dictators are doing. Look at that. He's trying to put Powell away because Powell has been doing whatever he wants. Right? He's been acting like Trump wanted, but you know, he's not a nice dog. He's kind of opening its mouth a little bit too much. Right? I don't like that. He's been criticizing me, so fire the guy. That's how Trump works. He works, and he thinks just like a dictator. If you don't blindly follow the guy into whoever stupid rainbows and unicorns world he might think we live in, then you're going to be fired. Is that the world we live in? Is that how economy works? No, it's not. And I pretty damn hope that the US will somehow wake up from this wicked, dangerous dream they're living in right now. Because this is the reality, all right? The reality is there. The stock market is kind of in between, and that's what people think. So I think the American people, I'm talking generally, I don't say every American is wrong. I think just the graphical, technical representation I have from American investors is just wrong. I see retail investors way too optimistic versus what the reality actually is. I see a stock market hesitating in between, and that will have to make a decision. Either it follows stupidity or it just goes back to reality. And reality to me is at least we go back testing some support. And let's be honest, I'm not just bearish because Phil is a perma-bearish and he always wants to sell the market. No way. You know what? I'm ready. I'm going to give you my bullish scenario if you want one. All right? to be bullish, this is what I want. I want the stock market to fail in here, retest the major support in here, kind of the big trend channel. All right, you take this trend line and you say, all right, we test this once again. Oh, god damn it, that's my target. Oh, maybe that target was meaning something. Look how fucking far we are from the moving averages. So yes, we'll have to catch up on those things. We have to range at best. I never said things will obviously be shit hitting the fan. All I'm saying is the high risk of this to come forward if we retrace. But still, there will be pending confirmation. I'm not selling for the goddamn crash to occur for sure. I'm selling because I'm normally going to have a risk management in between. I'm going to be selling until we get there. Once we get there, I'm going to lock on some gains, secure my trades, prepare for some reinforcements, and it's only when we're going to break down this trend line with negative stock market pricing, that negative stock market tops, all right, like lower highs, all right. When this will happen is where I'll say, all right, the recession is there, whether you like it or not, it's here. But until then, there are multiple underlying structures that need to set themselves. I think the first one is to stop the bubble right now before we take risks to trigger it. I think we definitely need to get to this support again. And only then, if things go well, and if the economy isn't deteriorating even further than that, like the Fed support is like relaunching some economical stuff, and we avoid some recession trades, then in that perspective, I'm quite ready to be bullish again in a year or a year and a half. But we need to purge the problems first. We need to deal with them. Too much risk, which means if we keep on piling up the risk, then at some point the shit is just going to come out of nowhere. Because that's how risk management works, all right? You cannot make money without risk taking. So when the money is easy money made by stupid retail traders bulk buying the stock market for stupid reason when the macroeconomic projections are not improving in the same time, means this is speculative bubble, which means it comes with a parabolic risk taking that always end up the same way. So anyway, that was just to sum up the core information heading toward the Fed and how important this meeting is, and the next one will be as well, because the stock market is basically pricing between 2 to 3 interest rate reductions. So if we are about to have 3 for 2019, then we're going to have to need one just today. We're going to need to have one today, probably one in September and one in December if we want to have 3 for this year's. If it is about just 2, then probably we're going to have one in July and just the last one probably October or December. All right, so we'll see. But today we're going to have a look at the dot plot, how the guys in the FOMC are thinking, and more importantly, how volatile this is, because I think this is where the actual game is. We know the FOMC is not agreed. There's no consensus throughout the FOMC. And what I'd like to see today, especially, how this moves on. What is the trend? Are the FOMC getting even more volatile inside the committee? All right. Is the dot plot getting even wider in terms of expectations? And in that perspective, that means even the Fed doesn't know where the fuck to go, because even in the committee, they don't know, they cannot agree to some scenario, and that will be the biggest concern. Or I would like to see some narrowing in the expectation, because last committee we've seen this widening into the expectation, and that's not a good sign. The Fed wants to show some strength, should be showing the market how control they think they have, even though they might not have that much control. They need to show some strength, and showing some weaknesses in here is not going to be good for them. So anyway, I don't know the numbers, I don't know the dot plots, I don't know what's going to be said, I don't know the words that are going to be used, I don't know how robots are going to take them, what trading actions might be triggered. So we'll see. We'll have more information by tomorrow. Obviously, no intraday trades today. If you want to take a swing trades, be aware that we're trading on top of a very volatile and highly expected monetary decision. So trade safe, have a rational leverage and exposition to the market. Don't come cry if the stop loss is hit, because that's just a 50-50 game in here. Slightly, I would say, all right, technicals are suggesting downside, so we'll see if we do have one, and if we finally manage to have lowering weekly tops, all right, just like we had back then, all right, that's what caused us to break down some support. So if we end up fading in here and getting back to the previous support, I think some breakdown may be eventually triggering later on. All right, so today, important, but don't take that as a granted stuff. Could be just a non-event, even though I hardly think it's going to be the case. All right, see you guys tomorrow. Trade safe. Once again, it is not about time to make billions and think that you will make billions. It is going to be interesting, but not necessarily trading side and monetary side of trading interesting. All right, don't take too much risk today. You might think it's going to be easy to make money with the Fed. Well, just learn what I said, right? It's going to be easy, which means it's going to be risky. Bye, guys.